In times of economic crisis, most people panic. But the rich? They remain calm. In fact, they don't just survive, they thrive. In 2008, while the world was dealing with a financial crash, Warren Buffett made over $2 billion in profit by buying stocks when others were selling in fear. And he's not alone. During the 2020 COVID-19 crash, the world's billionaires saw their wealth grow by $3.9 trillion in just 9 months. You might wonder, how do they do it? What do they know that we don't? Well, it's all about mindset, strategy, and habits. Millionaires have a way of thinking and living that prepares them to handle economic storms with ease. They don't just ride out crises, they use them to their advantage. In this video, we're going to uncover the hidden strategies that the wealthy use to remain unshaken during financial turmoil. You'll learn how they think, what they do differently, and how you can start adopting their secrets to build wealth, even in the toughest of times. Stay tuned. You'll be shocked by what you discover. Chapter 1. The Millionaire Mindset. Rewiring your brain for crisis. The first thing you'll notice about the wealthy during an economic crisis is their calm demeanor. While the average person panics, millionaires remain steady. This isn't just luck, it's a mindset. The rich don't view economic downturns as disasters. Instead, they see them as opportunities. Wealthy individuals often say, crises create millionaires. The key is to stay calm, assess the situation, and move swiftly with clear action. Studies show that 70% of millionaires started their wealth-building journey during economic downturns. Take Warren Buffett, for example. His famous quote, "Be fearful when others are greedy and greedy when others are fearful," sums up how millionaires think during crises. Buffett's strategy is simple. Buy when others sell in panic. When the market drops, the rich use it as a chance to invest at a lower price. They're not just surviving, they're thriving. Economic crises challenge the average person to protect what they have. But the rich are always looking for ways to expand and grow. They take calculated risks with the mindset that the best time to invest is when prices are low. This long-term thinking is key. Chapter 2. Born into wealth or made? The surprising truth about millionaire origins. You might think most millionaires inherit their wealth. But the truth is, 67% of wealthy families lose their fortune by the second generation. The wealthiest people aren't born into money, they create it. Take Elon Musk, for example. He started his first business at the age of 12. He built his first tech company, Zip2, which he sold for $307 million. Many rich individuals didn't inherit a fortune, they built it through smart decisions. Take Sam Walton, the founder of Walmart. Walton started his business with a $20,000 loan in 1962. He focused on offering low prices and delivering great customer service, strategies that outpaced his competition. The rich focus on value creation, even in tough times, and this focus fuels their growth during crises. The rich also learn from every setback. They understand that losses are a natural part of wealth building. According to a report from Credit Suisse, 50% of all millionaires in the world made their wealth through entrepreneurship. They don't fear failure, they embrace it as a lesson. Chapter 3. Living in chaos. The hidden habit that shields millionaires. Millionaires have one thing in common. They build habits that protect them during financial chaos. Their lives are often shaped by routines that help them stay grounded. For example, Richard Branson is known for starting his day with a swim and a morning meditation. It helps him clear his mind and stay focused. Another powerful habit? Diversification. Wealthy individuals don't put all their eggs in one basket. During times of uncertainty, they spread their investments across multiple industries and asset classes. This reduces risk and keeps them stable. For instance, Bill Gates made billions by diversifying Microsoft's investments into healthcare, energy, and education. The ability to stay informed is crucial too. Most millionaires stay up to date with financial news and emerging markets. It's no surprise that the top 1% of income earners read, on average, 60 books per year. They're always learning, preparing for what's next. Lastly, they know when to take a break. Millionaires know that stress is a wealth killer. They prioritize their mental and physical health because they know it fuels their decision-making ability. It's not just about working hard, it's about working smart. If you're enjoying these insights, don't forget to subscribe to the channel for more powerful strategies to build wealth. Chapter 4. Learning from the bottom. Why economic downturns are a millionaire's playground. During recessions, the wealthy see opportunities, not obstacles. Many entrepreneurs start their most successful ventures during downturns. Why? Because they have a different mindset. They see recessions as times to adjust, rethink, and innovate. Take Airbnb as an example. The company was founded in 2008, right in the middle of the global financial crisis. The founders saw people's need for affordable lodging and used the downturn as a springboard to launch their idea. The company is now valued at over $100 billion. The wealthy are also master learners. They invest in education, attend seminars, and hire experts during economic slowdowns. For instance, Mark Cuban, a billionaire investor, regularly reminds his followers to continue learning during times of uncertainty. He says, "The more you learn, the more you earn." Research by the National Bureau of Economic Research shows that business owners who invest in education during recessions are 40% more likely to increase their profits when the market rebounds. Chapter 5. Teaching the next generation. How the wealthy build resilient legacies. Wealthy individuals don't just focus on amassing money. They focus on creating legacies that last. They teach their children to be resilient during financial hardships. According to a study from the Boston College Center on Wealth and Philanthropy, 93% of wealthy families believe that teaching financial literacy is key to their children's future success. Take the Rothschild family, one of the oldest and wealthiest banking families in the world. They've been successful for over 200 years because they continuously teach their descendants the importance of financial responsibility and adaptability. The wealthiest families pass down more than money, they pass down values. These values include a long-term perspective, an appreciation for hard work, and the importance of staying calm in times of chaos. For example, the Koch family, owners of Koch Industries, emphasize these values in their family meetings and through dedicated educational programs for their children. Teaching the next generation about wealth building isn't just about managing money. It's about understanding the economic forces at play and how to respond during downturns. Chapter 6. Thinking in waves. How millionaires see beyond short-term crashes. One of the most powerful strategies the wealthy use is thinking long-term. While the average person worries about the immediate impact of a crisis, millionaires think in terms of years, even decades. This long-term perspective helps them weather economic storms that might overwhelm others. Take Jeff Bezos, for example. He started Amazon in 1994, just before the dot-com bubble burst. Instead of focusing on the short-term market crashes, Bezos stuck to his long-term vision of revolutionizing retail. By the time the economy rebounded, Amazon was already a dominant force. Data shows that billionaires tend to keep their investments for much longer periods than the average investor. A study by UBS found that billionaires hold their stocks for an average of 10.4 years, compared to just 2.9 years for the average investor. This ability to see beyond the crash is crucial. While the economy may dip, millionaires know that their investments will rise again. By focusing on long-term trends rather than short-term fluctuations, they stay ahead of the game. If you want more strategies on how to think like the wealthy and grow your wealth, be sure to hit that subscribe button for future videos.